Hey, good morning, everyone. Uh, Paul McMahon here from Forex Smart Trade. It is Tuesday, September 29th, 2020. Our goal here at Forex Smart Trade is to make you the best version of yourself, to close the gap between who you are and who you're capable of being. And we do that by helping people become financially independent, by teaching them how to currency trade using our proprietary indicators, and then using company money. So I'm glad you could be here this morning. With that, let us jump into it with our disclosure. This trade is for educational purposes only. All information given is speculative and involves risk. This trade should be examined and taken from a personal evaluation. All attendees agree that by watching that any trades he or she makes or he or she takes was of individual influence based on personal evaluation of the market. This webinar's intention is to demonstrate a method that can be used to make an evaluation of the current market. No past, present, or future incomes have been made or relied upon prior to or during this meeting. All right, so we're done there. We like to start with I'm a very kind of a repetitive guy, and I work off of a checklist. I've kind of committed most of this to memory, but let's walk through it anyways. So first, I always check. I want to make sure that my green charts and my CoinEx are live and connected. I know we're live and connected by checking the top left corner. When this is green, that means I'm connected to the internet. And when this is green down here in this corner, that means the chart is current, versus I could go back in time. When this is red, we're not current. Every once in a while, I move it back and forget to move it forward. So I'm looking at the wrong chart when I'm considering a trade. So you always want to make sure that this is current. On my green charts, I know it is current because I will see the price moving here, and you just saw it bounce down a little bit. So when the price is moving, I know that this is also current. Let's just get rid of the disclosure. Review of yesterday's trade. It's always good, especially as a new trader, to do at the end of every day is kind of do a review of what you've done that day, what went right, what went wrong. It's not quite as effective since we're doing it a week apart, but last time we were together, we took two thick orange line trades, and both closed. As a new trader, it's good to keep a little journal as to what you were thinking about when you took the trade, what you saw. I used to take a screenshot of what the screen looked like when I took the trade so that I could go back and review. What was it that I saw that made me want to take this trade on those trades that didn't work out? So it's good. It's a worthwhile investment to spend a little time reviewing yesterday. We are technical traders. The indicators pick up changes in price action or price movement. We do not trade on news, which is what a fundamental trader is. Because of that, we like to take a look at the news feed and see if there's anything that might impact what's going on. Now, the news feed we use is from forexfactory.com. And it breaks information down into three types of information: a yellow, low impact, an orange, a medium impact, and a red, a high impact. Today, and when we see a red, we kind of want to stay away from it. Now, today is going to be a little bit of a crazy day. Why is that? Because they've got those debates tonight. So, and not only because they got the debates tonight, look at how many how many yellow items we have under USD. Starting at 8:30, 1, 2, 3, 4, 5. An orange item, 6, 7, 8, 9, 10. There are 10 news items. Now they're all low impact, but together they could have an impact. So we kind of want to be a little bit careful, I guess, trading on the US dollar today, because we've got all of these low impact items, but when you add them together, there could be an impact. And there is, one school of thought. When you get two orange items might equal a red. So this many yellow items might equal a red. So we want to be a little bit careful in holding positions today. We've taken a look at the news. Now let us take a look at our technical analysis. On this trade, there are two my principal bread and butter trade is what's called the 10-point trade. The signals, the indicators provide probably a dozen different signals. And I'm always surprised every once in a while somebody figures out a new different signal that like nobody knew about, that they figure out when this, and this happens, this happens. The signal I primarily trade off of is the 10-point signal. And then a little bit with the thick orange line trade. I would say 90% of my trades are the 10-point trade. So with that, let us go take a look and see what we see. So we will start with the 10-point trade. With the 10-point trade, I am looking at I start with the majors and minors. I'm looking to see whether they're overbought up here or oversold. So right now we are overbought. Everybody's pointing down. The majors are pointing down. The minors are pointing down. And I have a double cross. Red's crossed over the green and black's crossed over the gray. So I have what are considered the first 3 points of the 10-point trade. Everybody's overbought, pointing down, and double crossed. So this is a nice setup. Then I'm going to go up to my TNTs, and I want to see how many lines are moving in the same direction as the TNT. The 2 orange lines are going down, and actually they're quite steep. And the 2 orange lines are going down, which means down, and the 2 blue lines are going down, which means up. So I only have 2 of the 4 here. Ideally, I want 3 of the 4 here. I've got up pressure with red on top, and I have a kink here in the line. Right here, there's a kink. When you see that kink, what happened on the next candle? It went red. So it is starting to turn. So I do have a point here, but I don't have the points here. I want to, based on the pressure, and the majors and minors, I kind of like this, and the steepness of the orange lines. Let's see what else we have, and then we'll come back to this. But even though we don't have the 3 points here, I like this setup. This is a nice setup here. Pound dollar, we're in the middle of the channel, so that's no good. Now the reason I want the overbought or oversold is because I am going to get this run through the channel. So had I caught this here, the previous candle, I could have run this 30 pips as it ran through the channel, so But right now we're toward the end of the channel. I don't know how much there is. A little bit more movement. How much movement there is, I don't know. I don't want to take a chance. I want to catch the run at the beginning if I can. Australian US dollar overbought. We have the majors pointing down, the minors pointing down, but what do you see here? This isn't as steep as this. So that's the steepness of these lines is one of the things that makes this attractive to me. Now this just got a little bit more steeper while we were talking about it. So I've got 3 points here. One that it's overbought, 2 that the lines are pointing down, 3 that we've got the cross. I've got the 2 orange lines coming down. The dotted blue going up. When blue goes up, that means down. So I've got 3 of the 4 here. And I've got red crossing over on top. So it's steep up pressure, but I do have red crossing. And the reason we get that red crossing is because we had this little kink here in the green line. So here we've got 7 points. So let's go ahead and take a look. So to do that, to take a look, I'm going to open a new chart. AUD USD. AUD USD. Let's find him. AUD USD. AUD USD. Huh. I don't know what this is. Let's look. So we'll give it a second to load. Just want to make sure that it's current. It's where it's supposed to be. Yes, it is. Now, different instructors have different chart setups. I was at a training a few weeks back with Kevin Jones Sr. His dad made the charts. He likes to have 5 charts up here, five of these. And then his suggestion is if you need more, then you break it down into a second chart. I've got 6. I like to look at the 5, the 30, the 60, the 120, the 240, and the day chart. Plus, I like a clean chart. So now when I start on my more detailed analysis, again, I've got the signal, 3 points here, 3 points here, 2 oranges going down, dotted blue coming up, and I've got the red, I've got up pressure, but I've got red crossed over green. Only thing that makes me a little hesitant here is I prefer this to be a little bit steeper than it is. So let's open her up. I want to know where my support and resistance are. So you see it's been a long time since I've traded this. On charts that on pairs that I trade all the time, I've got my support and resistance already all filled out. But here, I don't trade it that frequently. So I want to know where the support and resistance are. So let us take a look. The support and resistance is where there's bouncing in the lines. There's some bouncing here. There's some bouncing here. Right in here. Right in here. Here. Right in here. In here. And these lines tend to be about 30 pips apart on a 1-hour chart. Bouncing in here, bouncing in here, bouncing in here. I go 1 above, 1 below, bouncing in here, bounced in here, bounced in here, bounced over here. So I've got one above, one below. I'm going to pull it back out. Might even one, two. I'm going to go one more below. Over here, right in here. So now I'm going to spread it back out. Now, the next thing I want to know where my support and resistance are. I want to know what the trend is. So I've got over the last 2.5 days since Friday, I've got an uptrend, a mild uptrend, versus the previous week, I had a downtrend. Reason I want to know the trend is that's going to help me determine how many pips I want to take. If I'm taking a buy trade and the trend is up, I'm going to take a few more pips than if I am taking a sell trade and the trend is up. Because if I'm trading against the trend, I don't want to get stuck holding a position. So we've got a buy, and I am sitting right on a resistance line. So going back, I've got a down, a sell trade, and I am in this channel, so I am okay. I'm on the south side of the resistance line, so a sell trade here is okay. On my 120, my 2-hour chart, I've got up pressure with red on top. I've got the majors and minors overbought, starting to turn, but they haven't crossed yet. Again, on my 240, red on top. On the pressure, my majors and minors are starting to turn. On the day chart, I've got up pressure. So with green on top and diverging. So over the long term, this is telling me that this is going to keep going up. But on the short term, I'm seeing some pullback. On the 30-minute, overbought going down. On the 5-minute, down pressure, red on top. So I like a sell here. Now the question is, how much is it worth? And I've got 32 pips here. I am a conservative guy. I think we could easily come back and get 10 pips out of this. So let's go ahead and take a 10 pip sell. So I'm going to open up my chart, open up my CoinEx file, new chart, USD, AUD, USD. I don't like this chart, so I'm going to, I've got some templates built in here, so we'll use one of the templates. I am going to do new order. My lot size is going to be 1%, so I am going to look at how much I have in my account, which was about $8,200, $8,300. I move this decimal spot over 4 spots, 1, 2, 3, 4. So I'm going to take a 0.83 trade. It is going to be a market execution, and I'm going to sell. Now I am I've got my sell in. I need to tell the broker where I want to take profit and where my stop loss is. So I'm going to highlight the order line. It becomes blue. I right click. I go to modify. Let's go for 11 pips. And right now I'm going to go 5 times for my stop loss. If I click on the red, 550 points is 55 pips. 110 points is 11 pips. I click on the blue, I click on the red, it calculates it, and then I click modify and it drops it in. Now, on my support and resistance, I tend to like to go 2 support and resistances away. So if I went 2 support and resistances away. Here's one support line, so it would have to break this line, and here's the second one. So I want to go somewhere south of this, or excuse me, somewhere north of this. So I want to go to 11 or 7163. 7163, that means it has to break 2 lines. Now this is based on my risk tolerance and preference. I don't want to get stopped out, so I'm going to modify this 7163, 71634, and we're good. So that's one trade. So we took a sell AUD USD for 11 pips. We got plenty of room here for it to come all the way down. So let us that's good. So let's go back and see what else we have. 1, 2. Let's just take a look at the full Euro USD. 30 minutes coming down. So what I'm taking a look at, we don't have all 4 here. So I want to see what the other charts are doing. I'm oversold coming down through the channel, red on top, diverging. 5 minute is coming up with green on top. When I see this little crossover on the green crossing over, generally that tells me the next candle is going to be a green candle, and it was. 120, I've got mixed signals. The majors are coming down, the minors are still going up. I've got the 3 out of 4 here, and I've got red on top. I have got, again, mixed signals. The majors going down, the minors coming up. When I see divergence like that, when I see conflict like that, ideally I want both the majors and the minors to be doing the same thing. When they're different, I'm going to focus on what the majors are doing. And here on the 1-day chart, just like on the AUD USD, majors and minors are going up. They're midway through the channel. The pressure is down, but it's diverging with green on top, which means it's starting to turn and go up. So this is telling me that there's more up in the movement. The question is, can we get a little bit of down? When I look at my support and resistance, what do I see? You tell me. What do we see? We're sitting right on this resistance line. I don't want to take a down trade when I'm sitting right on top of a resistance line. So I'm going to hold off on this. So we're not going to take that trade. So we didn't have the full signal here, but I liked the setup. I liked the steepness of this. I liked where everything was. I liked the steepness of the orange lines. Here we've got actually get a little bit more separation than we did when we first looked. Red's on top. So, but when I looked at it in more detail, I decided to hold off. I'm sitting on a resistance line. It needs to break that line before I take the trade. I don't need to. One of the mistakes new traders make is they force trades. I don't need to force trades. Don't need to do it. So just be patient. When the trade comes, take it. Let's see if we got 6 minutes left. Let's see if we got a thick orange line trade. Thick orange line. I am looking at this signal. I'm looking at the number associated with the thick orange line, and this number is the scale of the thick orange line. It goes from 0 when it's as high as it can go to minus 100 when it's as low as it can go. When it's either as high as it can go or as low as it can go, based on how we've scaled that line, we don't think there's any more. When it's at 0, we don't think there's any more up in the movement. When it's at minus 100, we don't think there's any more down in the movement. So that's the beginning of the signal. We take this trade right before the top of the hour. In fact, some traders will wait till the hour changes and want to see this number change by 10. I am good because they're looking for confirmation. We want to get the bounce when it turns. I am okay if I've got a minus 100, I'm going to look for additional confirmation that we have indeed bottomed out. And that confirmation is going to come from the majors and minors. I want to see that they are below the red line, and I want to see them significantly below the red line. So here I've got part 1 of the signal, but I don't have part 2. So let's keep going on. Minus 71 isn't close enough to 0 or minus 100. It needs to be within 10 of either end. Minus 54, no. Minus 93, yes, that's within 10 of minus 100. But on my majors and minors, they're still in the channel. I want them down below. I want them oversold. I don't have that. So the signal, I don't have both pieces. Minus 58 is a no. Let's go to our second chart. Minus 7, euro pound. Minus 7 is within 10. I've got all 4 lines up here. All 4 lines up here. So to me, this is a sell. So on the thick orange line, we don't have to do any analysis. We've tested this. When we're on a 60-minute chart, we're within 5 minutes of the top of the hour, which we are. We got three minutes left, and I've got within 10 of 0, and these lines overbought. That is a sell signal. So let's go ahead and take a 5-pip sell. I'm going to open up my chart. File, new chart. Great Britain pound. What was it? Euro Great Britain pound. Euro Great Britain pound. I don't like this screen, so I'm going to make it to a screen I like. And what did we say the signal was? The signal was a sell. So I am going to click new order. 0.83, that's correct. Market sell. And I'm going to go down and highlight it. So I click anywhere along the line. I go right click, go to modify. I'm going to change this to 5 pips equals 50 points. And we're going to use 4 times for a stop loss. And this is calculated based on the historical accuracy of this trade. And I'd like to check to get, since it's such a quick trade, I want to make sure I get the full 5 pips. So 0.9090. I want to go to 0.9085. Is that right? Oops, we're on the wrong one here. Let's go here. Modify. 50 and 200. And then I want to go to from 0.9090 to 0.9085 to get my full 5 pips. 858. The stop loss is close enough. In fact, you know what I'm going to do is I'm going to just push this up just a hair. To be above these guys. So there's less of a chance of being stopped out. All right, so we took 2 trades. One was a thick orange line trade, a 5-pip sell on the Australian USD. The second was a 11-pip sell, a 5-pip sell on the Euro pound. And the other was a 10-point trade where we took 11 pips on the AUD USD. Now, let's just take a look. The clock is about to change. Let's see if this number goes to like minus 15. when it changes in 3 seconds. That'll give us a little, and it did. So this is a good trade. We should see that bounce within the next hour to reflect. So if you see, we went, it was at -6 and now it jumped to -17. So that means it's starting to turn. Okay, great. Thanks everybody. Thanks for coming. Glad you could be here. We're here to help make you be better traders. So if you need anything, just reach out. Thanks so much. See you next week. Bye-bye. Oh, wait, hold on. We got a question. Oh, thank you. Okay, bye-bye.